Hey everyone, thanks for connecting today. I'm the Chief Ethics and Culture Officer at Women in AI, a global nonprofit community for diverse leaders in artificial intelligence and data science. As a Senior Director at Capgemini Financial Services, I manage multinational teams and clients in the investment banking, capital markets risk, and regulatory compliance verticals. I'm a transformation executive leading and expanding international client accounts. I integrate finance, technology, and management pillars. I've worked across 4 continents with upwards of $100 million in revenue. I predominantly partner with CEOs, CFOs, and CTOs for digital and cloud initiatives with a special emphasis on mergers and acquisitions between global banks and their regional business unit within the fintech sector. At WalletMax, combining my 25 years of corporate executive and nonprofit C-suite experience, I partner exclusively with women-led startups to grow their social impact and revenue simultaneously in climate innovation, economic inclusion, and ethical enterprise operations. As we all know, and especially post-pandemic, there's rapid adoption of artificial intelligence and machine learning in all industries, especially the financial services sector. New data sources have opened up numerous possibilities, making decisions based on alternative data, for example, your social status, your second and third level contacts, home infrastructure, etc., to accelerate business adoption. However, also it impacts objectivity in decisions. For example, due to algorithmic bias, women who have historically encountered unconscious bias are excluded from financial system. There's a $17 billion gender credit cap that prevents 1 billion women moving away from unbanked and underbanked status. So unbanked means they don't have basic digital access to use a financial product. Underbanked means they have some digital access, but they are financially disadvantaged. For example, denied credit access by their local banks. Recent research by Visa has also proven that gender bias in credit scoring algorithms negatively impacts women, and it's cyclical. Their families, their small businesses, their communities, local economies, and so on. So this is the impact of gender bias in credit scoring algorithms. Now, taking it one step forward, we also know that another area where women are marginally impacted is in establishing a legal digital identity. With accelerated transformation post-pandemic, there's a lot more data being shared than ever. And as a result, there's increase in data breaches, even though we have regulations like GDPR in Europe that prioritizes opt-ins versus CCPA in the US that prioritizes opt-outs. We know that by 2024, 50% of data concerning women will use AI, ML, and NLPs. And it's critical to build financial systems that give consumers the confidence to share data with consent and in turn trust AI. AI benefits even beyond the improved decision-making when we eliminate bias in data, and also drives efficient enterprise cultures and strengthens teams, and of course, financial benefits. In a recent study at MIT, there was 75% increase in newer and more accurate performance drivers. Integrating AI into their continuous processes has increased decision fairness by 65%, thus boosting the overall culture and morale by 80%. However, AI adoption depends on trust. It could be from insufficient diverse data sets or bias in data, basically quality of data that determines the performance of algorithms, and in turn, accuracy of KPIs targeted. Building this culture of AI within finance should be top-down, driven from the CFO organization, and we should ensure every stakeholder is fully educated about the ethical standards and governance being inherent to the organization's mission and values. We need to make sure that every financial decision impacting women's lives and the broader population as a whole starts and ends with data, its quality, and integrity throughout. We need to break down fragmented data silos, right? So this is going to foster a culture across all departments, enable open and comprehensive data sharing, and that will build AI trust within the organization. More importantly, it's critical to ensure all stakeholders are part of the algorithm implementation and training. Lastly, we should establish transparent ethical standards in the entire AI cycle, be nimble to industry shifts, and reward unbiased cross-functional decisions. Beyond data quality and transparency in governance that we saw earlier, to eliminate bias in banking algorithms like credit scoring, especially within fintechs, AI and ML is being adopted in every department, from customer service and marketing to wealth management and global trading, right? So this has increased complexity around data oversight and accountability, even when the financial services sector is heavily regulated. The functioning of AI ML algorithms are opaque. For example, bias in insurance pricing, which significantly denies approvals for women compared to similar men. Responsibility is one of the core issues of AI ethics. The question is, who's responsible for decisions from complex bias in data and algorithms that impact everyday people's lives across all the financial transactions? When an algorithm is making decisions, whether to grant credit or loan or approve insurance, etc., the customers should be made aware of its machine making the decision, right? And secondly, how it arrived at that. It's never acceptable for fintechs to say, the computer says no, hence denying access to billions of women from their financial rights like men. There should be 100% traceability in type of data used, primary or alternative. How did they get access to these? Did the women consent? Some financial institutions are behind commercial sensitivity clause. That may mean they don't have to disclose how the decision was made. So how do we achieve balance and eliminate bias? We should integrate professional bankers as stakeholders into AI data and algorithm training. So a couple of years back, a tech entrepreneur went public when he got a credit limit 20 times higher than his wife, even though she had a higher credit score, and they filed joint tax returns. The investigation came up with credit card companies' algorithm being at fault, and there were no major bank liabilities otherwise. So do we blame the algorithm for denying access to finance for women? And it's the same for racial discrimination or any other discrimination for that matter, right? So fintechs and even large banks should immediately increase data and AI process transparency to customers. Of course, not all proprietary logic. And also, I'm a big believer in human integrated technology systems. So we should mitigate AI ML risks due to bias. How do we do this? We can build alert systems that flag unusual or unexpected action. We should keep humans in the loop, and all the final decisions like credit approval for women should be authorized by humans, taking in AI inputs. But also we should remember to train our employees to prevent unconscious bias and make these a distributed responsibility, right? So there is a potential to have bias in the human systems as well. So regulatory reporting is another channel. We should implement strict standards for ethics and data and integrate all data sources for comprehensive reports. Lastly, model risk management, right? So I come from a risk background. So beyond just credit risk or market risk, I think it's important to build a repository of all the models with ethical governance and oversight within your organization. We should build bias mitigation strategies through pre-processing, in-processing, and post-processing. Let's say, for example, if the data is not diverse, to include all gender, race, ethnicities, and so on, then the AI teams should have flexibility to reassess data before running algorithms. During in-processing, there should be penalties on undesired biases. For example, women should be accepted at the same rate as men, not less, not more, right? So it should be 50-50. And in post-processing, there should be specific models that double check and eliminate bias based on the original model's output for credit scoring. Now, coming to climate change, it's not going to be in isolation because we are seeing socio-economic impact of climate risks that are already manifesting across all geographies, right? In a recent McKinsey research, we find that these will likely be non-linear as system thresholds are breached and there will be knock-on effects, right? So it's a ripple effect and it intensifies. So climate change affects human life as well as the factors of production on which our economic activity is based, right? And by extension, the preservation and growth of wealth, it becomes an economic crisis in addition to a social crisis. McKinsey had measured the impact of climate change by the extent to which it could disrupt or destroy stocks of capital. It could be anything, human capital, physical capital, natural capital, but the resultant socioeconomic impact of that disruption or destruction has a significant impact again on the GDP, and in turn, a direct impact on the stocks of capital, right? So such impact can be globally classified across 5 impact areas. Number 1, it impacts livability and workability, right? So climate risk is not just associated to some environment challenge, but it's going to affect people's livelihoods and their day-to-day professions and personal lives. It's going to impact the food systems, right? There could be shortage or not enough food in certain areas, and there could be an imbalance. We are also experiencing physical assets, right? So there could be challenges in infrastructure, living places. For example, a particular place could become very hot that people are migrating away from that place. We may have global warming, so people are getting, let's say, health challenges and so on and so forth. So we also need to pay attention to the infrastructure services. So we are planning infrastructure, hoping people are going to settle in a certain location, but people are migrating due to climate challenges, right? So that becomes a ripple effect in terms of building infrastructure where people might not be there, but people are migrating to a location where infrastructure might not be up to speed. And lastly, natural capital. We know, right? We have very severe weather patterns these days across the globe. We've been tracking that for the past few years. It's getting intense every year. So there is a huge impact on the natural capital as well. As you can see, by 2050, we think there is a 2 to 4 times amount of capital loss, and also 45% approximate land area will be impacted to be uninhabitable. Also, at least close to 1.2 billion people may have some migration issues, livelihood issues, right? So that's literally a lot of people in the world. So within WalletMax, what we do is we advance social impact innovation, climate tech, and women-led startups. We leverage artificial intelligence currently, and we are also working with blockchain, but not to a lot at the moment. The goal is to expand in the next couple of years. We are very well aligned with the UN Sustainable Goals. We think there is a $2 billion market share, at least in the United States, where we are piloting at the moment, of climate businesses that are experiencing loss of customers and revenues to large franchisees in local communities, especially owned by women and non-binary communities. They lack financial capital, human capital for expanding and acquiring customers. So at WalletMax, our goal is to solve these challenges for small businesses and startups, especially in the climate and sustainable space, and women-led or non-binary led. And we offer exclusive loyalty reward programs that are affordable and sustainable. So we work with only sustainable startups and small businesses and their products and services, and create a digital reward system that benefits the business as well as the customer. So it's a win-win on both sides. We are offering these loyalty rewards in a digital format or as crypto rewards, which means you can purchase from one merchant, accumulate rewards, and further redeem at another merchant within our WalletMax network. And our responsible digital rewards ecosystem is not like the traditional rewards apps that you see every day. There are ads out there. Those are focused on already popular merchants. They have significant budgets. They do not have sustainability in their agenda. Where we focus and create a differentiation, and our value proposition is to support sustainable small businesses and climate innovation startups. We diligently curate certified products, and we simplify the launch of new rewards within hours for the businesses. So it's in the hands of customers to immediately start using and buying their products and services within the local community as a priority focus, plus also nationally. So within this scenario, we also incentivize quality local brands of customer choice. So if a particular brand is preferred better by a customer, then they get better rewarded, and thus we help alleviate climate and socioeconomic challenges within that community. In terms of market opportunity, we know 1.2 billion shoppers in the US will try a new retailer or a brand if they provide rewards incentives. And especially after the pandemic, e-commerce loyalty programs have expanded access to trillions of dollars in credit cards market share. We typically have at least an average of 4 credit cards per household in the US, and more than 75% consumers are motivated to earn cashbacks and points, thus increasing repeat business for local, national, and online stores. Our pilot market is also in the US, especially in the East Coast where I am. This ranks at the top with the highest number of cards in the country and exponential rewards-based retention, meaning people are willing to add extra dollars to the purchase in case they get better rewards that they can redeem next time. Better yet, on our platform, you can purchase in one place, get rewards, but then you will have personalized and customized predictions as and when you redeem across multiple other merchants, multiple other locations, and it is going to be real time based on wherever you travel within the US. And we also have a dedicated support for local businesses. But one thing is that we don't support any and all types of startups and small businesses. We clearly look for a certification. They should be certified as a sustainable or a climate tech or a women-led or all three by the US Small Business Administration, or they should have a B Corp certification, which is extremely aligned to the UN Sustainable Development Goals. Plus also either if it's a Women Business Enterprise National Council certified small business or a startup focused in the sustainability space. So these are spaces where we focus in terms of generating zero waste as well as zero socioeconomic challenges due to climate challenges. And we, regardless of the industry certification, we also further independently verify each of these small businesses for their sustainable standards, climate standards, ethical standards, and we additionally perform a layer of qualification to enable them for mutually beneficial rewards programs. We also try to keep the program up to date every 6 months once, so that the merchants are required to maintain sustainability and climate standards every 6 months once, continuously get certified, or else we potentially will drop them from our platform, right? The goal is to enable trust among customers on our platform, to be a single source for finding sustainable and climate tech businesses, buying their products and services, get benefited through rewards, both as a customer and of course for the business. And lastly, establish a sharing platform in terms of You can buy in one merchant and use at another merchant, plus also use a digital format or a crypto format, right? And then we also try to commit 70% income uplift for every business that we touch. Why I say try? Because it many times also depends on the location, the founder, the type of business. Sometimes it is 30% or a 70% or sometimes 50%. But our target is an average of 70% income uplift for every business that's onboarded on our WalletMax platform. The goal is they are in the climate and sustainability space, and they are connected with similar like-minded social conscious and eco-conscious customers to enable e-commerce. Our renewal revenue model, we do ensure periodic reviews, like I said earlier, and we constantly check compliance with certifications. This way, we solve dual problems in women's financial inclusion as well as socioeconomic impact due to climate risks. Thanks again, everyone, for this opportunity. For any questions or to chat more about any of the topics we spoke today, or to learn more about WalletMax, please connect with me on LinkedIn. You see my handle here, it's right behind me. Thanks so much. Bye.